Hello and welcome to this carrier update brought to you by PowerFleet. I'm Anthony Smith and I'm here alongside the one and only Zach Strickland. Zach, what do you have for us?
Yeah, Anthony, we've got a big screen of the outbound tender volume index and the outbound tender rejection index here. So I'm going to turn this way and show the big takeaway from this one. We've seen the tender rejection rates coming down over the last month or so. So October really kind of a transitional month before peak season really starts to crank. So tender rejection rates coming down, dropping below that 20% mark and have stayed below 20% for the last week and a half or so. Very interesting little aspect considering how tight we are in the overall market. Still 19% historically tight. Tender volumes, however, now this is the shocking thing. As tender rejection rates have actually kind of popped up here over the last few days, not tremendously so, tender volumes are coming down. And they've been coming down since the start of the month, so we're trending lower in terms of overall demand. And now this is largely the contracted side of the space. So when you're talking about, this is what shippers are kind of pushing out to get in front of the holidays, et cetera, we kind of thought there'd be a little bit of pull forward. A little bit of a bump right now in terms of like people pushing freight. Well, that's not happening. It's actually going the opposite direction, and it's the lowest the tender volume index has been, if you exclude the holidays, since about April in overall, in the overall OTVI. So not exactly what you would expect this time of year, but at the same time, maybe we've still got a week in front of the holiday. Maybe we're going to see some sort of late week push in terms of overall volumes here. So we still got time to go, but this is going to be interesting to watch because we thought, hey, everybody's going to push some stuff last minute on the contracted side. Maybe they're just going straight spot market.
So this downward movement, I know typically when we look at the year over year, we kind of see that downward movement. Then similar to last year, it popped up.
Yep.
So you're saying that there is a chance for that to kind of reverse potentially.
So actually what we normally see is kind of a slow, steady rise on the tender volume side, and then it peaks right before the holiday. This is a totally unseasonal direction here.
Gotcha.
And when I say that maybe people are going to the spot market straight away, it might just be to guarantee that service, because a lot of that freight that moves this time of year, it's got to move.
Gotcha.
You have no options. The warehouses are full. You've got to get to the store or don't. So they may be just paying a straight premium for it. And speaking of the spot market, let's go ahead and look at spot market rates according to truckstop.com's top 100. Now, we're not seeing a lot of big movement. Now, this is last week's rates on average for their top 100 lanes today. So we're kind of looking in the past a little bit with this index. Reefer rates bumped up a little bit, $4.08 a mile on average. And then we've got the other two down here, which actually took a little bit of a sequential decline week over week in flatbed and van spot rates. So not a big amount of movement here either. So we're not seeing a lot of spot market pressure just yet. Now this is obviously going to change. We saw the tender rejection rate kind of pull back up here over the last little bit. This is probably going to see a little bit of increase as well. So let's go ahead and check out the next chart here, because I want to dive into, this is the spot rates, top 100 lanes for truckstop.com. Big takeaway here, we're going to pick out a few little spots where we see some increases overall. I'm looking at Chicago over there. Chicago going into the Northeast, right there in the middle next to you, Anthony. Chicago to Boston, Chicago to Elizabeth, both taking pretty significant jumps up. So we're watching the Chicago market this week, and Los Angeles to Denver. If you find some other Los Angeles lanes out here, there's a few others scattered out that are also showing increases. So Los Angeles, obviously a huge market to watch moving into the next couple of weeks, because that's where a lot of this freight's coming through the ports. And then we have, we got another Chicago here, and then Laredo down along the border, showing a little bit of heat as well. So these three areas are definitely areas that you want to watch already. Los Angeles, Chicago, Laredo's kind of like that outlier that you're not really thinking about, but that's kind of the conglomerate action that we're looking at right now. Let's go ahead and look at our brand new market dashboard here to get a little bit deeper. So I've got the Los Angeles to Chicago lane pulled up here in our new track market dashboard, FreightWaves market dashboard. And you can see the lane displayed here, and here's the historical rate, and it's been rising ever since August. And actually, if we pulled this back further, I'm sure it would go a little bit further out, but it continues to increase. If you saw the aggregate spot rate on truckstop.com, a lot of those rates were actually coming, or slightly down. Los Angeles has not changed
Right.
direction or course. So anything coming out of this Los Angeles market right now, we've got the current rate of $3.53 all in on the spot rate here. $3.68 on the high end, $3.31 on the low end. Confidence score of 5. That means we got a lot of confidence. It's very tightly packed around this $3.53. So there's a lot of data supporting that $3.53 movement, and it keeps going higher. So dense lane, rates going higher out of Los Angeles, maybe a little bit different than the rest of the market.
Zach, I love it. I love this new track software or this dashboard. We're going to check in with you a little bit later.